Today, I'm gonna be teaching you guys about what is called market exposure. Okay, this is sort of the reason why people think that every strategy works. So, what we've got here on a chart, right? This is a backtest. Okay, this is a backtest of a profitable strategy, although not a good strategy in my opinion, because it's got too much volatility. This is something we do for one of our clients. But anyways, it can illustrate my point. Essentially, what you have within every strategy, whether it's random or not, anything that opens trades in a market, you're going to have periods where it loses money, like that point, and periods where it makes money. Whether the strategy is random, calculated, statistical, whatever, quantitative strategy, it will have a time when it makes money. So, most retail traders find themselves trading whatever bullshit strategy they find on the internet, and then they experience this a moment where they make money, or this moment where they are learning the strategy and they're making money, and then they believe the strategy works because of that one period, ignoring all of the other times it doesn't work, and all of these times they chunk it down to psychology etc, but in reality the strategy is just bullshit. Okay, so that's market exposure. If you open trades, you will make money and you will lose money. What's important is, are you profitable at the end of the day? Now, you may not believe this, so I'm gonna do this with an unprofitable strategy and show you how that would look like. Okay, so let me run a back test. So we've now got another strategy running here. As you can see, this one is sort of like mostly a random strategy. It's a random strategy taking random trades. Even a random strategy has times where it will make money, loses money, makes money, loses money, makes money, loses money, loses money. But at the end of the day, because it's unprofitable, eventually it will end up losing money. The starting balance was 9K. Now look at it, it's at $474. This is most strategies. People see these moments, and these moments make them evangelists of whatever strategy that is, and they believe it to the core, and they think they're the problem, and they will not listen to anyone telling them otherwise about their strategy. But in reality, at the end of the day, this will happen. You will lose money, you will make money, and you lose money, but you always lose the money if your strategy isn't good. No matter what you do to your psychology or your risk management, this will still happen as long as the strategy is unprofitable. That's where the issue is. That's market exposure. If you open trades, you will have pockets of profitability. But just because this happened once doesn't mean that the strategy makes money. Okay, that just means you're trading. It's market exposure. Send this to someone who needs to understand and learn this.